You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Gurwitz, Managing Director of the Charles Nenner Research Center. Welcome to the show, David.
Pleasure to be on again, having just come back from now, actually sunny London. And north of London, I was in Manchester in a place called Liverpool, which maybe people have heard of, with the Beatles.
A couple of lads, maybe 4 of them.
You're married to a Brit, that's why you could speak like that.
Yes, well, she's from London. It does make a difference.
Yeah.
David, was there anything that you picked up from London about how things are going with the world economy?
Yes, quite a few things, hopefully. One is it's very vibrant over there. 20 years ago was not. There's a lot of, the economy's strong over there. I was surprised a little bit because, as we maybe seen, we've been writing, Europe, parts of it have been a little challenged and will be, but I was very, very surprised how vibrant the place was. People looked well fed and well dressed and busy, and I was all over the place. I was in Piccadilly, and I went all over and had interviews in a bunch of hedge fund places, and I was on Bloomberg TV, and I just had a sense that things were going pretty strongly over there. The euro, which we've predicted has been up. When Goldman said it was going to head to par, we thought not, and we were right. It seems to be helping them. Plus, they have people from all over the world. Their skyline is like the most unusual skyline I've seen in a long time. And so when you have that kind of influence from all over, I guess it positively affects that. There's Indians, there's Russians, there's everything. There's Pakistanis, there's you name it. And I was there in the middle of a football scandal, so that obviously keeps everybody very busy over there.
And of course, too, I think London has the world's biggest population of billionaires.
That could be. I didn't see them. Or if they did, they didn't tell me.
They weren't that obvious.
They weren't that obvious.
Go out about midnight, and you see a lot of 80-year-old men with 19-year-old blonde dates.
Oh, really? Okay.
Yeah.
I didn't know. I was afraid. I still think of Jack the Ripper, it is a city. It's funny, as an American and a kid from the Bronx, I haven't been there in a while, and I started the trip in north of London. Manchester's 3 hours north, and Liverpool is 45 minutes west of there, and obviously I'm a Beatles fan from the old days, so I had to go to Liverpool. And Birmingham on the way, which is a slightly different place. So you get a sense of a different part of the world, but certainly a lot older, and they have a tradition. We have a baby country. They don't. So I sensed it, and they tell me it's overcast a lot over there, which I suspect because people fight depression a lot over there. Whereas I'm sitting now in New York, and it's sunny, and it's been a rough winter, but we have I think a slightly happier disposition, partly because of the weather,
So now you're back home and taking a look at the markets.
Yeah.
What about the equity markets, the S&P, the NASDAQ, and the Dow?
Well, we wrote yesterday that we're expecting a down move, short-term bottom in a week, but we're expecting a down move from getting it today. And then after a bounce, we think it's kind of down through the end of the summer and goes up into the beginning of next year, roughly. And your listeners should write in, and they'll get more information, and then could be somewhat negative going forward after that.
So we really should be dreading September, October?
No.
No?
No. We actually think it could be pretty decent.
So a dip in the summer, then?
Yeah, a dip in the summer. And then up. Again, this is not all straight. Moves are moves. What? I tell you something, what I feel, for what it's worth, given our breadth of clients all over the place, and I occasionally listen to them. I'm kidding. I try and listen all the time because they're smarter than me. We just know cycles and target very well, but they're ones who are using the information in trading. Because of the electronic trading, you've got these range-bound stuff. Once something triggers, it goes back and forth, and it just 2-3 moves. The bunds today big move down, bottom up. So you don't have the human interaction anymore. And it affects things, even though the cycles still work. I mean, otherwise we couldn't be in business if they didn't, whether it was technologically less challenged, okay, and now more challenged, being so much faster than it used to be. Nonetheless, things still move in those patterns, but the speed of the electronics has changed the human interaction. And you don't have bond desks anymore. You don't have a lot of desks at big places. So you don't have extended moves so quickly, so you have a lot of short-term stuff. And it's harder for people to deal with emotionally. Up, down, up, down, up, down. And, that's my sense today of, what I got when I was talking. I met with a bunch of publications writing about hedge funds and family offices because they know our work, and that's a big area of, as well as individuals. And, it's like you said about billionaires before. A billionaire having crude at 97 doesn't keep his crude from going down. The I-40s, like we said, whether he has $1 billion or someone has $100,000, and owns $10,000 of a crude, ETF or something. So they're just as affected, and the cycles still work regardless of where it is. That's the beauty of it. But my sense is that, electronic trading has really, changed things for the individual. It's made it harder for them to make short-term moves because they're getting front-run by a lot of places.
Well, there was that move by trading houses to physically move closer to the trading center because that nanosecond of transmission time could make the difference in a trade.
Totally.
How do humans cope with that?
That is a very good question. I mean, just watching the information, as I think I've mentioned before, I don't know if people are listening now. We try with our update, as you've seen, stocks, bonds, commodities, currencies, 3 times a week. Short, here's the levels, here's the buy signal set. We try and make it a 4-minute read, knowing that everyone's overwhelmed information-wise. That's the answer, hopefully, to your question, that yes, everyone's overwhelmed. Even the good ones, even the ones that trade well, there's so much information flowing. You need to process it and think, and then you put on a trade, and then you have to decide how long, how much, where's my stop, do I add to it? Not everyone's a trader. The world used to be put it in, and kind of things went up 10-15% until 6 years ago. 2008, the summer of 2008, we took everyone out of the market, and it looked good, and everyone got very upset with us. Why would it change? And somehow it did at the end of 2008. Since the beginning of 2009, things have pretty much gone up till today. And while we've called most of it, we haven't called all of it because, no system. I wish we were that smart, but we've called most of it. But it goes in steps. And we've, along the way, saw that it wouldn't continue, and it did. And then our system showed that, okay, it's going to go longer. We might as well take a different look, and it showed that it would. That's what technical analysis, it kind of takes a lot of pieces, and then it changes once it gets to certain objectives. And so the individual who's trying to process all this, I don't know how they do it, Jim, if you really want my opinion.
And of course, it didn't help, I'm sure, trying to predict cycles with all this quantitative easing.
No, that's where I disagree.
No?
Because think about it, if that would affect us, then we don't have a business. Because all of a sudden, there could always come up something that would, well, you didn't think of this, or a war, or this one, Janet Yellen does that, then if that's the case, the cycle system wouldn't work. And we think it's the opposite. We think at a cycle bottom in stocks, something's going to come along that's going to drive it up. We don't know what it is, and everyone thinks it's probably this quote-unquote easing, which is basically prime the pumps and throw money at the people to invest. So something did come along at a bottom that certainly drove up stock prices. You could argue that it was the printing because it had to go somewhere, and but we were right that there was a major bottom. What causes it, we'll never know. And if we think there's a big top coming next year, we don't know why. It just is, based on the repeating patterns from the past. And then afterwards, people will say that's the reason. Paul Tudor Jones, who may, as you know, but maybe others don't, is one of the greatest traders that ever lived, said recently in a 13-piece interview, 13 steps or 13 pieces of knowledge to think about in trading, that once the reasons are explained in something, the move's already done, and you can't step in. So a lot of times people have to decide to take moves based on something other than the full explanation of it, and we think our cycles and our target allow people to do that.
Is there one particular market you think is going to have a surprising move for most people?
Nat gas.
And what's happening there?
It's in the high twos now, and we wrote, let me tell you what we wrote the other day. It held above 256 and rebounded. It closed above 275 is needed for a new buy signal. Daily cycles bottom. Could go to 5. Why? We have no idea. How's that? We have no idea, but our numbers say this, and after it happens, boy, you guys are smart. And I'll say, no, we're smart in this, but we don't know why it moved because we're not that smart. Whereas crude, yesterday, we wrote this closed above 60.85. To buy it again, we wait till it closes above 62.15. Now there's a short-term cycle top, which means we can get a down move to 55, and if it closes below 59.70, that's a sell signal. That's how our system works. Seesaws and levels on the seesaw to look at when you're trading. So if you put the stops in, you're in pretty safe mode. So you don't get beat up so bad. Because I think that's a big part of trading. By definition, you're not going to win all the time. You're playing a game, you're going to get beat up. Why get beat up too much if you have stops that are very strong? Like bonds, we were standing aside because it was a buy signal in bonds, but it's risky. But nonetheless, and look what happened in bunds, got beat up the last few days. But there was conflicting. Dailies are up and weeklies are down, so you had to push down. Then it was a cold still bottom and it came up. So that's the type of thing we would recommend seeing. Both influences, we would stand aside.
Yeah, I just talked to an analyst. He said he watched the German bond market melt, and then he says all of a sudden it bounced back. He said it's amazing.
And we wrote, quote, not that I'm bragging, but there's conflicting cycles in German bunds. Dailies are up, weeklies are down. The weeklies have been dominant as the bund prices fell in the last few days. We think a bounce is likely. However, sell signal only be canceled on a close above 154.95. We were right. Now, this was hard to do. I edited this. So our research staff wrote it to me, and we changed it 4 times to express that because it wasn't so easy to say it in 5 sentences. But it's exactly what happened because we saw conflict, and we saw conflict. How do you trade it? We don't know. That's a whole other thing. It just happens to be German bunds. It's a huge market. It's German bonds. And there are negative rates over there. People are putting in money to lose money in bonds. So, longer term, that's a bad trade. If you think about getting out of a long-term 1% or 0% bond, I don't know, what do you get? It's better to sit in cash, arguably, so you're not getting the income, but at least you won't get beat up on the capital loss when rates go the other way.
We'll have more with David Gurwitz right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with David Gurwitz, Managing Director of the Charles Nenner Research Center. What's happening with currencies? U.S. dollar's been super strong the last couple of years. Is it going to stay that way?
Well, it's been strong not the last few months, but the last few years, because the euro's been on a buy signal, which means the dollar wasn't. And we wrote yesterday the buy signal in the euro continues, and we saw another bounce. In short term, we could see 112.50, and if it closes above that, we go to the target we gave last month of 116.40. But it's risky. And if it closes below 109.15, the buy is canceled. So there, the euro's been stronger. Goldman Sachs put out it would go to par. We didn't agree. So far, we've been right. The Aussie has gone up. We said it would decline at 75.88 and bounced, and now daily cycles are bottoming again. So we need to close above 77.95 for a buy signal. So those two are stronger vis-a-vis the dollar. Canadian dollar cycles are near their cycle top, but a close below 122.90 still needed for a new buy signal in Canadian strength versus U.S. dollar. So therefore you have the euro, the Aussie, and a certain level attainment which would indicate those three are stronger than the dollar. Now, a close above for the yen, 123.05 dollar yen's now needed to signal the end of yen weakness. So we think the dollar will be near its top longer term. So it's had a good run, which we predicted, and we think it's not that long from now that it'll be over.
The Chinese yuan, people are making noises that they might want to be the world's reserve currency, but perhaps the nearest thing to that would be in October try to get into that international basket of currencies they use to adjust rates.
Right. I have to tell you, I don't know what to say about it. I haven't really studied it enough. I honestly don't know. I mean, that's a whole thing. We don't have any track record on it. Something's going to happen. I just know China was the second biggest economy in the world in 1900. I don't know if you knew that. And it fell apart. So there is an argument they'll do it again, which is hard to see, clearly. But that's our system. We don't think in the same logical way other people do. Everyone in our company was not exactly the well-behaved kid in school. We all thought differently. That's why we get along so well, you know. So I didn't get any records for behavior when I was in public school. I did very well in everything else, but not well in behavior, and everyone else is similar. So that we all are a bit rebellious. Maybe that's why we're drawn to this different way of looking at things, because the movie Close Encounters, everyone's building a mound in their house as Richard Dreyfuss took it to the next level. I got to meet these people. So we're a little like that. But the Chinese, I don't want to talk about now. I don't have enough knowledge and research to be able to say anything.
Plus, you never know about the numbers coming out of there because it's all government controlled.
Correct.
And they like to keep secrets like most governments.
Correct. Do. It's funny. I'm a musician and a composer. I have a music site, davidgurwitz.com. I welcome everybody to go and spend the $12 and download the CD. It's not a CD. I download the music. I don't have CDs anymore. My kids said, Dad, you can't have CDs anymore. Nobody has them. Nobody listens. I said, fine. It's the only way it gets downloaded. And one of the songs is called China. I have a YouTube I made called China. I wrote a song that sounds like Chinese music. So I have a different thought process and relationship with China than most people. It's funny you're asking it. When I went to high school and in my college, I was a math person. And back then, a lot of Chinese kids went with me were big math people. So they're very mathematical, China. And one of the things that they're also very sports and they're very music. So these all coincide. And a lot of people playing piano over there. Their language is very musical, Chinese.
David, how can someone subscribe to your newsletter?
Google Charles Nenner, and there's a site that says Charles Nenner Research. Go there, big thing that says contact us, write and say they heard me speak on your show, and they get a free month, and someone will be in touch shortly about the different subscription options.
David, thanks a lot for chatting with us.
Pleasure, and you got me before the jet lag hits me a little bit.
I'll give you 2 weeks to recover.
Thank you.
Okay.
Appreciate it.
Thank you very much.
Okay, bye.
Bye-bye. David Gurwitz, Managing Director of the Charles Nenner Research Center, has been my guest. The website, charlesnenner.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.